Hey guys, welcome back to the channel where we are selling options until we hit $1 million. And right now I'm covering the massive broad market tech sell-off that's been happening and has been hurting the portfolio in the month of February and late January. As you can see on the 1 month, we started out super strong and then have been just broad market sell-off, have been taking hit after hit, but still performing a lot better than some other people, especially I've seen online some people who are uh, all tech heavy portfolios. They're down 20, 30, 40%. We are now down 7.16% on the year on 2026, coming from a very strong 2025 where we made over $42,000 or about 15%. And that was a pretty light portfolio. I would have made a lot greater returns if I had gone in tech. So I did switch it up and I'm playing a riskier portfolio this year. But as you can see, that is hurting me. But in times like this, I say don't look at the short picture, zoom out. We are in it for the long game, which I have some good examples for later in this video. But the bottom screenshot there, this is the 3 year. As you can see, all these dips, we've had a very strong rebound. The chart has been going up and to the right. So it sucks. I'm not going to lie to look at your portfolio and I mean, see like the past week down $15,000 almost. Like that sucks to see. And that sucks to see in your portfolio, whatever 5.63% is on yours. But don't just follow my trades blindly. Also do your own due diligence. I'm not a financial professional, but still we saw a nice day, nice gain on Friday, over $12,000. These big 10K plus days I'm not used to seeing in my portfolio. This is not something that I would have seen last year with my more defensive positions. But again, I'm 24. I have a long time horizon to recover, so I am playing riskier stocks this year in the tech centers and selling the whole picks and shovels aspect, as you've seen from my previous videos, into the AI data center and power needs boom right now that's going on, that I believe is a once in a lifetime opportunity, and also a lot heavier into the crypto space now, which I haven't played historically. So we'll get into all those later in the video, but again, now we're right on the year. And is this a market rebound? Is Friday the start of a rebound, or is it a dead cat bounce? We'll see, and time will tell. But this last week, we are still continuing the options wheel and we are putting money in the pocket. I realized a JP Morgan put contract, so collected 307 total profit on that. Collected, a hood option expired on a Robinhood at the 100 strike price, so got assigned, had to buy 100 shares out there, and IBIT, which is the Bitcoin ETF. So got assigned there, had to buy more IBIT at the $49 strike price, 100 shares there. So 640 in the pocket, cash ready to deploy more into option strategies. So again, what is the options wheel strategy? We start at the top here, where we sell a put contract at a certain date at a desired strike price that we want to own the stock at. Again, only sell on tickers that you are comfortable with holding. Don't just blindly follow what I do on a lot of these videos, especially now during a market downturn where people are getting assigned left and right. I see them in the comments, like on content creators that I watch, also covering the wheel strategy, and they're like, "You told me to buy." Like, no, always do your own due diligence. Don't just blindly follow people on YouTube. Uh, Own stocks that you are happy to get assigned at. Don't sell the strike. Don't sell at that strike price if you're not happy owning that stock at that strike price. So, wheel quality tickers. That's what I always say. That broadly is the number one rule of the wheel strategy. So anyway, after the selling puts, when we get a sign, like in this market downturn, we will turn around and sell call contracts. So even though while we're holding the stock, we are collecting income. It is not just sitting idle at a desired strike price that you're comfortable with selling the stock at and getting called away potentially. So then you just restart the wheel and start at the top. And again, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. So this last week, some news. There was the tech sector continued to sell off apart from Friday, which was a very strong rebound, which we'll see if it sticks or if it's just a dead cat bounce. How much is big tech set to spend on AI in 2026? Probably 650 billion. So that was a very prominent headline on capital expenditures. Going all into these AIs, how much these hyperscalers are spending. You saw in the Amazon Web Services, you saw their earnings. You saw a lot of other, you saw Microsoft, you saw other software stocks and hyperscalers report they're spending so much money on AI, so much capital expenditures are going. And the question is, can they make money from all of these expenditures, or is just a big circle of these AI companies just feeding money into each other? But time will tell. But that scared investors. I mean, that was in part helped the transition away from tech stocks and software stocks into other defensive sectors because of worries on valuations, on run-ups, and on future profitability from all this capex. Will it be profitable for these companies to put this much money into this AI spend? So the second headline is actually the Dow, which is hit 50,000 for the first time on a very volatile week. The Dow Jones Index is not as tech heavy as the QQQ or SPY. So even though this just shows the tech sector got hit heavy, while the other defensive stocks continue to rise, like some in my portfolio. And then another news is the Friday's job report is delayed because of the government shutdown that happened. But the government's reopened now, and it's set to report this Wednesday. So could lead to another volatile week here if the jobs report are bad. But also the market could take it as a good sign and take it if the job report's really bad. That means we'll need to cut more interest rates and cut interest rates faster to kind of stimulate that growth. And this is kind of the meme of the week based on Friday's closed. I think I'm going to start doing this. I kind of like it. Not sure if I'm trading better or the market stopped going down. This is due to the $12,000 gain on Friday, but still down overall. So going into the current activity, this is a banking stock. Someone in the comments last week wrote that I don't play blue chip companies. I do play some blue chips, but definitely not as much as I did last year in this account. If you watch my older videos, I am very more tech heavy and less on the blue chip tech names, but still very prominent and quality companies. But one of those blue chips that I have been playing and have played in the past is JP Morgan Chase, a huge banking company that went down because the Trump administration and Trump himself announced that he wants to cap interest rates instead of charging these 35% interest rates. He wants to cap credit card companies at about 10. And that's gonna hurt revenues if he does implement that. And one of these was JP Morgan, but they have so many other streams of revenue that are very diversified apart from the credit card revenues that they gain on interest rates. So I believe the stock had a large overreaction. So I bought on this green arrow here, sold a put contract at the 305 strike price. So if it dips below by February 12th, I would have had to buy 100 shares of JP Morgan at that 305 strike price. And as you can see, it did dip below. It did into the high 290s and 300s, and then it recovered. But I believe this was a large overreaction of the credit card announcement interest rate caps. And then, as you can see, it rallied back up to the 320s, and I sold at the high 310s, so collected $307 in a realized profit. SoFi Technologies, we have sold another banking company who have a lot of streams of revenue, but these guys have been getting oversold because of the crypto. They announced that they've had a small part of their company it has exposure to Bitcoin in the crypto space, and they've been getting pummeled. I mean, they've been oversold. As you can see, RSI is in the 20, very oversold territory. I mean, hit 20, rebound back to 31 on Friday. When's the last time they've been this oversold? Not on this time frame. They're trading below the 90-day SMA. They're trading below the 200-day SMA. So slowly desaying in, sold 5 put contracts at the $21 strike price, which is a good support zone, as you can see from back in August and July. They've had some strong bounces there, but I'm very comfortable selling 21s, 20s, 19, 18 strike prices. I think this is a very good zone to load up, and I think it's going to go up from here. But as you can see down right now, five contracts out in SoFi. Getting into Nucor Steel, this is one of the more defensive companies that I've been owning for over a year now. And we did sell a covered call this last week at the $195 strike price, which it has been inching towards. It's been on this massive bull run since June, a little bit trading sideways, and then hit November. And even though steel is a cyclical industry, Nucor is one of the largest steel producers in the U.S. and they've just been rallying ever since the October, November months, sitting well above their 90 and 200-day SMA. RSI is almost in the overbought territory. So I'm comfortable. I mean, this goes into the long-term tax bracket for me. So I'm at an 18.5% gain currently, or about $3,000. And I'm comfortable selling this stock at the $195 strike price as soon as RSI hits that overbought. Collect about, in the 20% range plus the covered call, and that's for holding it a little over a year and a half. And that's not including all the covered calls that we've sold to collect income while the stock has been going up. So total, I mean, probably that's 6 to 8%. So total, this would be a 28% on the year, which beats the portfolio last year. Well, over a year and a half. Then we get into Robinhood. I mean, right now I have so many friends trading the prediction markets, sports betting on the Super Bowl, sports betting on a lot of stuff. The prediction markets are going to be a huge revenue source for Hood. It has been hugely oversold, continuing with the crypto market, crypto winter they call it. Heavy oversold. I mean, RSI went even below the 20. On this time frame, it has never gone this low. Blew right past my support zones where I sold a strike price. Sold two at 110, one at 100. So the stock is hitting my concentration limits of the portfolio. But I just believe it's been a huge overreaction, huge undersell, a nice rebound on Friday. So we'll see if this continues, trades sideways or trades down. But I don't think it'll trade sideways because their earnings are, I believe, on Tuesday. And I mean, I think they're going to beat. And as you know, I don't trade options during earnings because it's very volatile. But we own 300 shares. It's at concentration. I would love to buy more, but all eyes on the earnings report, which I think they're going to beat. But time will tell, and we'll see. Celestica's been going pretty well. This is I saw a $250 put option, way below the previous strike prices. I've played this on the portfolio before at the $265 strike prices, which is a little bit up, but playing it a little more defensive angle here. Sold a $250 strike price put, which is above on this consolidation level over here, below the 90 SMA, but still above the 200. So trading in the mid RSIs hasn't been on the oversold yet on this time frame, but anything can happen. Celestica makes switches for data centers, so this is one of those picks and shovels plays for, but it hasn't sold off like the rest of the tech sector. So about 30% gain on this so far, or $300. Keeping a close eye on Celestica. And we'll close at 50% profit or more if it makes sense, if it's over 50% in the next week or two. Now, Bitcoin has been selling off, but there are some good signs. It hit the low of 60,000, and I would not recommend to play BitX. This is a leveraged product, so be very cautious. I'm only putting a very small amount of my portfolio into it. But Bitcoin hasn't seen the oversold RSI below 30 since that early December. That's the last time when it went, when the price was hit 80,000 and then had a strong bounce off and has been trading sideways since. Then rejected in 2026 in January, went slightly above the 90-day SMA and rejected and has been trending down ever since with this big sell-off coming. But there are some good news with Trump announcing that, Trump's always been pro Bitcoin and pro having a reserve. And there's a rumor out there that the US might fill up on their strategic reserve that includes Bitcoin holdings that they've got from criminals and confiscated in the past. Instead of selling it, they are now holding it. But there's a rumor out there that the US might load up on these levels in the 60s and 70s. So we'll see. Right now, today's Sunday, 2.8, and it is trading up a few percent, but we'll see if it holds, if this is a dead cat bounce, if it trades sideways. But the new Fed pick also seems pretty pro crypto in general. So keep a close eye on this one as well. RSI above 30, above the overbought because of this bounce Friday. Now Reddit reported fabulous earnings. They reported a strong user growth. They crushed EPS estimates, crushed all analyst estimates. Their ad revenue growth was huge. Their revenue from selling to all these AI companies, that their data, I mean, when's the last time you chat GPT'd something? It probably comes from a user post on Reddit. This is what they're making money from. And yet the price went down. I mean, it was up 14-15% in pre-market and after hours on the earnings report, but it continued to sell off on the worries of overbought tech valuations. They announced a stock buyback program, but also some mixed news on the CEO selling shares. But that's, I believe, it's just taking profits and not that he doesn't believe in the company long term. So sold a 210 put, which we were well underwater on, down about 32%. Extremely high volume on Friday. It was very volatile from green to red, but we'll see if it can find a good support. But this is just, in my eyes, an insane overreaction with RSI being at 18. The stock has not seen this on this time frame. So I think it'll find a nice bottom and go up. And I'm very happy to actually probably play this and sell more, load up on these levels if the earnings that we saw last week continue. And then Palantir. Also, we played through earnings. Again, no options through earnings. We're down 16% on them. They are trading now below the 290-day SMA, as well as all other tech stocks. Went slightly into oversold territory, but still trading in the 30s, or sorry, slightly in the heavy oversold territory, but it's still in the oversold territory. Trading in the low 30s, RSI's at 31. Friday was a slight rebound day. It's trading in the 135, and we sold 165 put, so we own 100 shares of Palantir. And again, crushed earnings. Palantir is one of those companies that has never missed on earnings since they've just consistently been crushing all analyst estimates. But yet, worries, broad market fears, macro has dragged it down. So this is also a tech stock that hasn't seen the oversold territory on the heavy oversold territory on this time frame. So I think this is a good level to load up. But this also, is this a rebound, or is it a dead cat bounce? So time will tell. And then there's a few others that we didn't go over, like BWXT and CRDO, which are trading. BWXT is slightly above the strike price that we sold at, so not too much movement there. CRDO is a little below, but I just heavy demand. I think it'll continue to do very well. There's also Talon Energy, which is another power generation stock, and CEG Power Gen. We'll see if it's a rebound. Talon's charts looks beautiful. Very strong pressure upward. Lots of buyers came in when it dipped to the 330s, 320s. So keeping a close eye on these power gen stocks. And yeah, sitting on 13% cash right now. So still have some money to deploy if it is a dead cat bounce. The market continues to go down. So guys, thank you for tuning into this week's video. Big question, is this a dead cat bounce, or is this a start to a market rebound? But again, as a reminder, only sell puts on quality companies that you are okay with owning. See you guys next week.